throwing it to the one and only Jeremy Burke to get us started. He is back. Welcome back, Jeremy. How are you, man?
Thanks, Elliot. I'm excited to be back, and it's good to be back here at Benzinga.
Fantastic. I was like freaking out a little bit because my video wasn't like popping up. So I'm going to get off. Nobody's here to see me. They're here to see you and Zach. Thanks, man.
Sounds good. All right, great. Well, I'm Jeremy Burke. I'm a senior reporter at Insider, the publication formerly known as Business Insider. I'm here with Sundial CEO Zachary George. And since we only have about 20 minutes, I just want to get right into it. Zach took over as CEO in January of 2020. Though he's been on the board since 2019 of Sundial. And his task over the past year, 18 months or so, has really been to turn the company around and to kind of take advantage of some of the changes coming down the pipeline of the cannabis industry. So Zach, good to be here, and thanks for chatting with me.
Thanks, Jeremy. Great to be here.
Yeah. So Zach, let's get into it. I mean, you know, Canadian cannabis companies have posted weaker quarterly earnings than their U.S. counterparts this year and a little bit last year as well. You know, what in your mind are the factors driving that, and what are the best ways to chart a path forward here?
Sure, it's a great question. So, you know, the Canadian market is certainly growing, but that being said, profitability has remained an issue broadly for licensed producers of cannabis, and we have certainly not been immune to that. As you're probably aware, the level of vertical integration that exists in the U.S. creates quite a different business dynamic than what you're seeing in Canada. In terms of the drivers or the attribution around those headwinds, I would say there's really three main factors to point to. One would be price compression. So because of oversupply, we've seen over the last 18 months, in some cases, flower prices down by over 50%, certainly has an impact on realized profitability and revenue across the space. Regulatory dysfunction also continues to be a challenge. We've got conflicting provincial regulations. We have an extremely onerous excise tax regime and challenging Health Canada regulations in addition that have created some inefficiencies for operators. And I think those will evolve and become more industry friendly over time, but it's going to be a slow process. And then also just sheer competition. So you've got well over 500 licenses granted. The space has largely been commoditized. You have simply too many companies vying for market share with very similar product offerings. And I believe that'll be solved through the coming years with some combination of both consolidation and attrition, because not all of these companies are going to survive. In terms of our specific position, we're working to limit the offering of discount products in markets where we view the economics as neither attractive nor sustainable. We have no interest in pursuing unprofitable revenue growth just for the sake of putting up a good top line number. And we're not seeking to maintain market share at any cost. We've also restructured our cultivation activities. Cultivation on a consistent and high quality basis is actually much more challenging than many people would expect. And we've seen some great progress on our side in terms of potency and the quality metrics for premium flower. And we continue to invest in our library of strains, utilizing both data insights and continued improvement in our processes and operations to achieve more consistent quality metrics, higher potency, which is important to today's consumer. And we're excited to commercialize some of our new strains in Q4 of this year.
And just quickly, for viewers who may not be in Canada or may not be kind of aware of the day-to-day changes, I mean, what are the regulatory hurdles that you spoke about, in terms of maybe retail store rollout and complying with regulations? Like, what are some of the key things that you can pinpoint?
Yeah, ultimately, some greater access to e-commerce and direct-to-consumer activity is really important. So, some provinces currently allow for delivery, for example, others do not. Some provinces allow for licensed producers to own retail in some form, others do not. Some provinces have a cap on the number of retail locations that you can own as a private manager, others do not. So there's a broad inconsistency. When you look at the size of the Canadian market with a population very similar to the state of California, the complexity that introduces, which needs to be managed by Sundial and its competitors in Canada, can be quite challenging.
Got it. And I wanted to ask a question, around the volatility in the cannabis sector and with cannabis stocks, Sundial included. Despite this weak quarter that we discussed, or weak couple quarters in the Canadian sector, by and large, cannabis stocks have been ripping. This morning's pair back notwithstanding. But I'm curious about your perspective. I mean, what do you make of that, and what are the kind of things driving these gains over the past couple weeks and months?
Sure. Look, it's a great question, and I know there's a lot of focus on that. I think what we can say for sure is there's a tremendous amount of excitement around the growth of the global cannabis industry. Okay, so when you see a cluster of catalysts, as we have over the last, say, 6 weeks, with recent North American merger announcements, even a comment by Amazon supporting a federally legal regime in the U.S., you tend to see volatility increase along with trading volumes. And so while there will be a host of factors that go into why our shares or others are trading at any given level on any given day, we've seen a correlation there in terms of these catalysts and then interest in the equities.
Got it. And part of that trend to me is this broader theme of the democratization, of the capital markets, of investing in stocks through platforms like Robinhood and chat groups, Reddit, Discord, etc. In a retail investor heavy sector like cannabis, I mean, how do you take advantage of the popularity of the stock with retail investors? And part of that question is, like, what management challenges does that present, and how do you make sure that this is a positive and not a negative for Sundial?
Sure. So there's certainly a number of opportunities that spring from this dynamic, but also challenges. So, I think the retail investment market has changed a lot. It continues to evolve, but we've seen a lot of change over the last several years. Retail investors have become more and more sophisticated and have access to tools to express their investment desires in new and interesting ways they're very efficient. So I think the retail investor needs to be respected and recognized as an important market participant. The dynamic that we're seeing today is potentially not fleeting and just a part of the evolving capital market landscape. The fact that the retail investor, often behaves differently from an institutional investor can also be valuable. In fact, we believe that the support from our retail investor base has really been key to accelerating the turnaround at Sundial. So it's been very helpful to us. In terms of challenges with such a disparate shareholder base, some of which have different investment horizons, it can be very difficult to connect directly with your investors. We don't have any individual really large minority holders, for example. So if you're looking to communicate on strategy, performance, and governance, we can obviously do this through public channels, but it's very difficult to connect sort of one-on-one with these investor groups. And I would also say in some cases, a short-term mindset and a short-term investment horizon can actually conflict with a path to long-term sustainable profitability. And so we need to continue to work to be as transparent as possible with our strategy and our path forward as we work to create value for our stakeholders.
Now, the question of reaching shareholders, I imagine that's gotten a lot more difficult, with, like you said, this kind of retail heavy sector. How do you bridge that gap, and what are some methods you use? And part two of that question, I guess, is how do you kind of convince those retail investors who may be a little less patient than institutions that the moves you're making are the right ones?
Look, it's something we have to wake up and recommit to every day. I would say that Jeremy, you and Benzinga are sort of part of the solution there as well with forums like this. Back in the day, you used to see private investor conferences where retail investors could never have access, and so broad dissemination of web-hosted events like this are a huge opportunity for engagement.
Got it. And then last question on this front, I mean, what can you learn or what do you look at that managers who have similar dynamics, on their stocks with this heavy retail investment, companies like AMC, like what can you learn from how they've capitalized on this interest, and what learnings can you bring into Sundial and I guess cannabis more broadly?
Yeah, so the AMC case study is certainly a fascinating one. And I think that in connection with their recent capital raises over the last couple of days, you saw some really important and somewhat new commentary that would be unique in terms of messaging from a public company CEO.
Yeah.
But they publicly have acknowledged the extreme volatility, that's impacting the equity, and flagged specifically to their investor base that volatility could result in material losses, for investors. And so while flagging those risks, I think in a responsible manner, but also using the attention and interest in the company to access capital, which will ensure that they have more stability and optionality as a going concern, as an enterprise, is something they've done. We've been on that path for some time. So, we since garnering the attention and profile that we have, we've been able to quite easily raise north of $1 billion Canadian, which enabled us to take our debt to zero. We have one of the healthier balance sheets in the Canadian sector, and puts us in a position where we can really play offense and contribute in terms of industry consolidation and driving returns for our shareholders.
Great. I just want to move along here. I really appreciate those answers, Zach. But looking towards the U.S., I mean, I listened into the vast majority of Canadian LP earnings calls this past quarter, and a key theme that came up is the U.S. is moving slowly and in fits and starts towards legalization, but Senator Schumer, the Senate Majority Leader, has a promised comprehensive bill that's supposed to hit the Senate floor anytime. The MORE Act, another legalization or decriminalization bill, is recently reintroduced, and even House Republicans have introduced their own version of a legalization bill. So, what do you expect, sitting here as the CEO of Sundial, to see in terms of federal change in the U.S. this year? And at what point, will you feel comfortable kind of looking to the U.S. and potentially making some acquisitions or entering the market?
It's a great question. I don't think I'm going to drop any big predictions
Sure.
today, Jeremy.
No crystal ball.
I do believe, I think it's not controversial to say it's really a matter of when, not if. So this is going to be a process and an evolution. Whether we get material movement this year, even with the safe banking proposal, or whether it takes 24 to 36 months for us to see real change, tough to say. I know in our case, I would say that we do get a lot of pressure from our stakeholders to make announcements related to entry into these large markets like the U.S. and Europe, for example. And we are actively assessing those opportunities. That's an important part of our job as fiduciaries. But I want to make clear that our first priority does remain Canada. So, we believe that the evolving Canadian marketplace is currently very dysfunctional and challenged, but that you're going to see material change in a much healthier market, just around 2 years from now, and view the Canadian marketplace as a prize that's worth fighting for. In addition, I would say that as a Canadian domiciled NASDAQ listed entity, our NASDAQ listing itself creates some challenges for us to directly invest in plant touching assets in the US. So we think that opportunity set will evolve over time. And there are various ways that we can take advantage of opportunities in the US, as you've seen some of our peers do, in a structured manner, or through entering distribution, product mix, or IP related activities that are not necessarily attached to THC. But that's an evolving scenario. So we're being presented with a number of opportunities. We're being quite careful and cautious to make sure that we're focused on our strategy and taking on actions and activities that are accretive to that strategy. So I would just say we're very committed to being in Canada, but seeing some opportunities that we expect to capitalize on in the coming years.
Got it. No, look, it's cannabis is a quickly evolving sector. It's brand new. It must be really difficult to run a cannabis company given all the stakeholders involved. Heavy regulations, media scrutiny, investor scrutiny, like we've discussed. So what's your best advice to other executives who may want a job in the industry or who are about to start at some of your competitors or companies in the U.S. as well?
Sure, it's a great question. I can speak to my personal experience. I was really excited to work with the team at Sundial, really because of the challenges that they faced both internally and externally. Anyone that's looking to become a professional in this industry, I would say needs to be comfortable with a really high rate of change and significant uncertainty. So if you're looking for certainty and comfort, probably not the best industry for you. But this industry is still in its infancy, possesses a lot of opportunity. It's just not for the faint of heart because the sands are shifting underneath your feet right now on a constant daily basis. It's a great industry. It's extremely dynamic. There's some incredibly passionate people working in it, and our team at Sundial loves to wake up every day and work to connect and delight consumers.
Got it. Now, you mentioned Amazon's public support for legalization earlier in our discussion. And I thought you had a pretty interesting and somewhat contrarian take on that when we were discussing the other day, or yesterday, excuse me. So, in your mind, how big of a signal or not is it that Amazon is now publicly supporting legalization? And, do you expect other companies, tech giants or CPG giants to follow suit?
Yeah, so I would expect that you see a similar reaction from large corporate entities, both in U.S. and beyond U.S. borders. I think as a starting point, we just need to recognize that Amazon's home base is really Seattle, King County. Cannabis is illegal in that area. I think that they're responding to a shifting environment in an intelligent way. They're focused on employee rights and how they're going to engage and support their teams and employees going forward. And so they've acknowledged that their practices in terms of drug policies and testing are shifting. And I think that's just very much a sign of the times. I would just be a little careful about extrapolating too far in terms of Amazon very quickly becoming, a category killer in yet another industry. I think that if anything, this can also be seen as a passing comment. The optionality alone that accrues to Amazon through supporting this and even staying on the sidelines and observing and trying to figure out the best way to participate in the industry is an extremely smart move. But the notion that we're going to see a rash of acquisitions or other aggressive measures in the near term, I would be quite cautious in making that assumption.
So, Zach, is it safe to say that no one is terrified yet of Amazon coming in and dominating the industry?
I mean, I think in some quarters that reaction was occurred, but from our perspective, we're not going to lose sleep over it right now.
Gotcha. So I think we have about time for one more question quickly. And Sundial notwithstanding, what advice would you have for retail investors who want to invest or take advantage of the broader theme of cannabis legalization?
That's a great question, Jeremy. So look, it's really research. Okay. There's many different companies and investment opportunities in the space. When in terms of the retail following that we have, there's a lot of excitement. But I think that people need to really do a lot of homework to assess the risk associated with these investments, and whether those risks are appropriate for their individual profile. We're not in a position to give investment advice by any means, but
sure.
My advice would be to ensure that you're reading companies' financial statements, you're reviewing their website, understand their products, their offerings, the services that they provide. Read their press releases, how they're communicating with the investor base. Listen to conference calls. If you can't listen to the conference calls, listen to the recordings, grab the transcripts, understand the differentiated models in the space and their various risk profiles and prospects in the sector. And look, it's still a startup industry, and with a number of startup companies, we ourselves are just about 2.5 years old. Looking to compete with other entities that have, for example, been in the medical space for, as long as 7 years. So we're trying to improve every day and compete in this space. But the only guarantee here, I think, in the near term is going to be more volatility. To some extent, there are winners and losers in the sector that are still being determined. And so I think investors need to be aware of and comfortable with that dynamic.
Got it. Zach George, CEO of Sundial, always a pleasure speaking with you. And I will turn it back to Elliot. Thank you so much. I really appreciate it.
Jeremy, Zach, thank you both for a wonderful discussion. Appreciate you guys being here.
Yeah, absolutely. Thanks a lot.
Thanks, gents. See you again soon.